Hi everyone, this is Rahul. We will be resuming our technical analysis for the Indian markets from now onwards, right? So what we will be doing today is we will do a Fibonacci analysis on both Nifty and Bank Nifty to understand what we can expect from the market in this week or in the next coming weeks, right? So what we see here on the Nifty chart, if you see clearly, the previous structure has been broken, the swing low has been broken. So the trend which was moving up has definitely turned into a downward trend. Okay, we are not expecting the trend to be bullish right now. What we're expecting is a pullback, and you can see this pullback has already happened. Right now, we may expect a further pullback. That depends. So we will use Fibonacci to see what are the levels we can expect as a correction, and what can the market do once it completes the correction. Okay, so we will be using this swing high, this swing low, and if we draw Fibonacci, what you notice is that we are exactly at 38.2%, right? Which clearly indicates that we are looking for a new low, or at least the previous low being tested again if the market does reverse from here. Now we are seeing a bearish candle here, but not a strong reversal confirmation yet, because this candle has a spike. So chances are it may do a further retracement. At 50%, we have the previous swing low, which will act as resistance again, right? So there is a possibility the market can spike there. There's also a possibility that we can see a drop right from here. So there are two outcomes that can happen: either 50% retracement or a drop from the current price. Now, if you go into a daily chart, what we see here is that at one side, the lows are actually getting higher. On the other side, if you see, the market is kind of coming together. The highs and the lows, the distance between them is actually reducing, right? So there should ideally be a breakout on one side. Now, normally when we see a pattern like this, we do see a downward breakout. So that's what is actually expected. But you never know. Looking at the candlesticks, downward is better, but you never know, because there is a 50% resistance also nearby. If the market breaks this particular level, we can see a spike touching the next resistance before the market actually starts to fall again. So what I would be doing in this case is, if I see the market playing below this level of 9,100, at least one hourly candle which is body dominating, I'd be going for a short. Else I would wait to see what the market actually does, right? So if I do find the market moving up, I would wait for the 50% Fibonacci level. So I'll just tell you where that is. It is at 9,888. Okay. So one of these levels is what I'm looking at a short. Although chances are higher of the market moving down from the current price itself. It's just that we don't have a very strong candlestick confirmation yet. But if we do get a candlestick confirmation on Monday morning on the hourly time frame, that would be a good signal that the market will resume its downward trend. So in terms of the trend, we are still in a downward trend. The trend has not yet changed to a bullish trend. It's just that right now what we're seeing is a correction. Okay, now let's move to Bank Nifty and check what's happening there. Now, if you see Bank Nifty, the fall has been sharp. At the same time, here we do have a candlestick confirmation on the downward side. We can see that the market has done a retracement of only 23.6%, which shows that it's a very, very weak market. Now, at 23.6%, we also see a strong bearish engulfing candlestick pattern on the weekly chart, right? This indicates that there should be a further downward move. So I'm not that bullish or even sideways on Bank Nifty, expecting this to make a new move on the continuous downward trend is what the expectation is from Bank Nifty. All right. So this is what you have to keep in mind. If you are trading, I would recommend you to wait for a higher price and go short instead of trying to buy and capture the retracement. That is the plan for this week. And depending on how the candlestick closes this week, you will decide what to do next. Thank you.